Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for Monday, March the 9th. Really, I guess we could say it's even Tuesday, March the 10th, if we're going by UTC time. So I wanted to do an extra video this week. I did one yesterday, but I wanted to do another update video because the market is really, really crazy right now, and just see a lot of uncertainty out there, and also I see a lot of people who are going back and watching my old videos and then saying, hey, this is how you felt back in January, how do you feel now, etc., etc. So I wanted to kind of share my thoughts with you guys. Before I jump into the content, a couple things. Number one, don't forget to hit that thumbs up button, and don't forget to subscribe to the channel if you haven't already. Number two, don't forget you can join the Patreon for more frequent updates. So for example, I'm in there posting a couple times a day. Sometimes I'll do like a little mini video update. Sometimes I'll just put some charts up there with, like a paragraph of what I'm thinking, what I'm watching for, and things like that. Real quick, simple way for you to stay up with the market. Real quick and simple way for me to share my thoughts on the market. And you can find a link to the Patreon down in the description of the video. You can join for literally less than $5 a month. So basically a cup of coffee. So let's jump into this stuff. Let's talk about what's going on. So the main reason that I decided to do this video was somebody commented on a video back from January 30th, a video that I had done. And in the video at the time, I think price was around $94 or $9,500. Let's go back and look. So January 30th was right around this area. Okay. And what I was saying was I was going to wait for a pullback down to around $7,700 to $7,800 before I got too bullish. And what I was looking for was this inverse head and shoulders to form. I actually rewatched the video to kind of see what I was thinking, what I was watching for at the time. And I had just taken a long position at $9,200, but I was looking for it to have a correction after the the upward move stopped. And in the video, I heard myself say something. I heard myself say, if this pulls back to 77 or 7,800, that would make me lean more bullish, which is good. It's good to go back and hear that type of stuff, because I was getting like pretty bearish the last 48 hours, thinking, maybe this is more than a correction. So kind of made me like rethink and like re-examine things and say, okay, what changed, with me from January 30th until now? So we're going to talk about that. So, first chart I want to take a look at, let's take a look at a weekly chart. Okay, obviously it's just Monday, so we're really going to be more interested in last week's candle, the candle that just closed, a little over 24 hours ago. So we'll put this on a candlestick chart, and I'm going to put just one moving average on here. It's going to be the 19-week moving average. Okay, the 19-week moving average, a lot of people use the 21-week. You guys that watch the channel know that I like the 19 better. I think it's more accurate. Basically, as long as price is above that, that's a really good sign that we're in a bull trend. So for example, if you go back, you can go all the way back here, just back, right? Once it broke above this thing in the latter part of 2015, it just stayed above it. And it just had this beautiful bull run where basically anytime price came back down to the 19-week moving average, you could buy Bitcoin at that level and you'd make a lot of money as it went up, right? You see this perfect touch here and over and over again. I only wish I knew about the 19-week moving average in 2017, like when I first started trading, right? In May of 2017. But I didn't. And I also didn't know about it in 2018, right? I wasn't watching in 2018, but in 2018, once we broke under it, it flipped to resistance. And again, if you'd have just been short and waited for it to, have a close above that and maybe a couple candles above it, could have abilited losing, a ton of money. I mean, I just lost an enormous amount of money in 2018 because I had been converted into a hodler, and when I was trading, I was winning a lot. I was really having a good time trading, but I was trading for sats, right? Instead of trading for US dollars, I kept trading for more Bitcoin and more Bitcoin. And when you're trading for an asset that's just dropping, you end up losing a lot of money. And that's exactly what happened. I lost a ton of money, all right? But it's stayed underneath that. It was a really, really good line in the sand. And then again, in 2019, once it broke above it, it was off to the races, right? If you went long when it broke above it, closed above it a couple of times, you could have been long down around $4,000 and just rode that sucker. Okay, could have made 300% easy, or at least 200%. okay? When it broke back underneath it and we had this huge pump in October, really, what did it do? It acted as resistance. Sure, there was a wick above it, but it closed underneath it. The very next week, there was a bearish retest of it, and if you got short there, you'd have been short down around 9,800, and boom, could have wrote it down to 6,400. So when it broke back above it, right, when I did that video on January 30th, it had just broke above it. It had come down for a bullish retest, and it had bounced off of it. So that was one of the reasons that I was thinking, hey, maybe we're in this new bull market. This is going to be awesome. But now, we have the benefit of it's been over a month and a lot's happened. And when it came back down, at first, it found support right on top of it. And that was looking pretty good. But then what happened that was no good was instead of coming down, tagging that 77 or 1700 and then bouncing right back above that 19-week moving average, it closed underneath it, okay? So really what I'm going to watch for now, and by the way, guys, I want to be very clear, I'm in a long position right now, okay? So even, everything I say, you need to understand that I am long, okay? So it's to my benefit if this goes back up, but I'm still very skeptical of what's happening, all right? So we came down, we tagged this $7,700 level. That level was important for a couple different reasons, okay? The first reason it was important is because it really, in my mind, that is the left shoulder, okay? When we start talking about this giant inverse head and shoulders that might be forming. I've been talking about this now for over a month. So have a lot of other, technical analysts, okay? It's not just me. I didn't invent this, obviously. But this looks interesting. It could go up like this for sure. Wow, what kind of arrow is that? Okay? So to me, that is the bottom. That's the line that we wanted to come down and tag. But more importantly, that was a gap. That was the last daily bear gap on the CME. Now, we do have gaps in the CME, like on the smaller time frames, like the 4-hour time frame. But as far as daily gaps, they have all been filled in from a bearish standpoint. Okay, the only gap that still exists is this gap way up here around 11.8. So coming down to that level, it was really important. It filled the gap right here, filled that sucker in, okay? And in my mind, that gives Bitcoin permission to go up, okay? Which is just, obviously a metaphor, but it gives it permission to go back up. So that's bullish in nature. Again, coming down to that left and touching that left shoulder, again, bullish in nature. So that's all good and dandy, and that's one of the reasons I went ahead and took along using proper risk management, all that kind of stuff. Where I get a little bit concerned at, oh, and by the way, let's not forget, I should have mentioned this, that yes, it went a little below the golden pocket here, but anywhere between the 61.8 and the 78.6, that's the reload zone for long-term investments, okay? So a lot of long-term investors, that's where they're looking to go long, and they'll go long there without a stop loss. They'll go long, and that's it. They buy it, and they're planning on holding it for years, all right? So that level is very interesting. Also, when this had its tail, okay, so when price was down here around 76.30, this was actually pinging right against this yellow line. What is that yellow line? Well, that yellow line on RSI is our weekly trend line in RSI that dates all the way back to December of 2018, right? Really, really important line in the sand. If we break below that, it's going to probably get really nasty. But as long as we're above it, I feel like this could be a correction, right? If you have bought on these retracements, these 61.8 golden pocket retracements in the last bull market, you could have done extremely well. So I don't want to let my bear bias cost me money, right? Right now, the chart looks like this is a good place to go long. I'm not telling you to go long. To be very specific about that. I don't know how much money you have. I don't know what your trade plan is. I don't know what your financial situation is. None of that stuff. I'm talking about for me. I feel like it's a good position to go long, a good place to go long. So that's what I did. All right. Now, on the flip side, the bear side of the coin, a couple problems I have. Number one is the fact that we did break back below this 19-week moving average. Didn't pop right back above it. So I am going to watch that. If price starts to move up, I want to make sure it can chop back through that level. If it starts to find resistance and falter there, I may get out of my long position, assuming I'm not stopped out before then. Okay. The other thing that's really interesting was this green line, this RSI line. We never came below that green line in the last bull market in 2017, 2016, and the end of 2015. We always found support and moved up off of that level. So for us to come back down like this, not good. And last week on this wick, this actually did come up and touch this, right? I posted about it in the Patreon saying, hey, we've got a bearish retest happening right now. And it failed, and boom, price moved back down. So the fact that it was unable to get back above this and then it broke below it, that worries me a little bit. And that concerns me that maybe this was just a bear market rally, okay? Meaning that we have more downside. And I still think that's extremely possible, all right? So that's kind of the weekly picture. Now what I'm going to do is I'm going to jump over to a 3-day chart, okay? The 3-day candle closed, what was it about? This time change has me completely thrown off. Closed like, I don't know, a couple hours ago, 3 hours ago or something, okay? Couple things that happened. This thing actually broke below this blue line that I was hoping would act as support. It broke and closed just below it, so that wasn't great. I didn't really want to see that, but the good news was the 3-day candle did close right inside the golden pocket. So I'm still watching this and just kind of waiting to see what this next 3-day candle brings. I'm keeping an eye on the fact that we are in a downtrend, a very clear downtrend. Down, up, down, right? So this next leg up, maybe it comes up to 83, 84, 8500-ish, right? I probably will look to take some profits on my long position there, depending on how it looks. If it looks real strong, maybe I'll stay in, but chances are I'll probably take profits on that long position if price moves back up there. And I would expect it to move down like this, okay, and put in another lower low. If it keeps going up, that's perfect, that's great, and I'll be happy to, maybe jump back into another long position once it kind of establishes a nice uptrend. But right now, we're in a downtrend on the daily, we're in a downtrend on the 3-day, okay? The weekly, it's really up for debate. Let's take the moving average off, okay? We needed to close above this $9,500 level. We did it, which broke the downtrend structure, right? We had this stuff like this, and this came up, broke this level. But the reason it concerns me just a little bit is depending on whether you trade wicks or tails, and I really like to use closes more often on this type of stuff, but there is an argument to be made that this was actually not a higher high, that if you go by the wicks, this high was 10,540 and this high was only 10,522, in which case this wouldn't be, creating an inverse head and shoulders, it would be creating a lower low, okay? So there's still that argument to be made. If we look at a daily chart, this is that daily chart with a lot of lines. If you're not used to this, it's a little confusing, so let me kind of walk through it real quickly. Obviously, we have this yellow line. This is a long-term trend line on the daily that dates back to 2018. We had this red line, which was the shorter-term uptrend that dated back to November of last year. We came down below it, came up for a bearish retest, right? Perfect place to go short, and then boom, dump. So I'm waiting to see, is this going to move back up here, or is this going to come down and tag this line and stop me out of my long? I don't know. We broke through this red trend line, right? This was a steep trend line. No one really expected it to hold. It was just kind of a line to watch. Broke through it, came up for a bearish retest of, where these lines converged. So this long-term line from 2017 and this upward sloping line converged here. Perfect place to go short, okay? Hit this support level, which dated back to December, right, just a couple months ago. Sliced right through it, bounced off of it. So if you went long here, could have made a good little, bit of money, like $800-900 per Bitcoin, but then sliced right through it. We haven't touched this red trend line yet. So I wouldn't be shocked to see this thing collapse back down and test this, and then maybe move up to 84, 8,500 area, something like that, okay? Again, I'm long, so I'm a little bit, I'm a little bit concerned about the long position, but if I, was scared to take a trade every time I had a little bit of concern, I'd never get into a trade. I'm always a little concerned, right? There's always going to be something that says, oh, this might not work out. Every trade has risk involved, and right now I felt like it was, risk reward was there to try to catch a falling knife, okay? So that's what I did. In full disclosure, I need to share this with you guys because it's important to understand this. I probably wouldn't have longed it, but I did it by accident, and I feel a little bit silly sharing this, but I'm going to share it because, it does happen. I put in an order on February 7th, 478.75. Okay. I forgot about the order. It just completely slipped my mind that I had it sitting there. And then today I was sitting there watching Bitcoin. It was this morning, about 20 hours ago or something. And then I was actually logging into one of the other sites because I was going to withdraw some money, right? Because I wanted to move some fiat over because I'm thinking the stock market might be getting ready to crash. I'm going to buy some stocks, trade some stocks. But when I did, I realized I have some Bitcoin here. Why do I have Bitcoin? What's going on? And then I looked down and realized that order from February 7th had actually filled. So after it filled, it actually bounced up to like $8,000, but I didn't know it had filled, so I couldn't sell it. And then, by the time I saw it, it was kind of like, oh shit, now what? And it was right around $7,800. So it was, just a little bit underwater, like 1% underwater. And I thought, well, it's not that bad. I'll hold the position and see what happens. So when it went back up, just 79.41, I think it was, I sold half the position just because it wasn't a position that I really meant to be in the first place. So I went ahead and sold half just to reduce the risk. But I didn't sell all of it. I went ahead and kept half of it because I did see some reasons for a long, and I thought, well, shit, let's roll the dice a little bit. So that's why I'm in a long. Okay, probably wouldn't have longed it in all honesty if it hadn't been for that. But anyway, I do think maybe it'll come down to this trend line and then bounce. That's kind of what I'm watching for. This is a really high volume dump, so that concerns me a little bit. But at the same time, even with all that volume, price really didn't get pushed down that far. This big candle here was the lower volume candle. See, this high volume candle here, there's a lot of buyers fighting the sellers there. So you end up with this doji candle. So I don't know, right? It's a little bit sketchy which way this thing is going to go, but I'm watching it. Okay, I'm watching it closely to see if it can get down to this trend line. If it breaks through that, I'll get stopped out and I'll have to wait and see what happens next. But I'm watching a few different things in this chart. We do have, I'm going to turn the volume off. We do have this fractal, which is, kind of wonky, but I am watching it. This is the fractal that points down to this longer term trend line that goes back to 2018. And we do have this head and shoulders. So, on one hand, we have the potential inverse head and shoulders, but that's a potential. That's not a pattern until it's a pattern. Right now, it's just a maybe. This head and shoulders right here, on the other hand, is not a maybe. It is confirmed. It's a head and shoulders. Okay. Now, the good news is, for me, okay, is usually, not always, but usually what happens on a head and shoulders is price will break through the neckline, and then it'll come right back up and test it, and then move down. Okay, so that's kind of why I decided, hey, I'm not going to close it long. I'll close half, and then I'll ride the rest to see if maybe I can get lucky here. And again, that's why I said earlier in the video 84-8500s, because that's right around that neckline for that head and shoulders. All right, but I do think it's going to be a bearish retest. We'll see. If it breaks through it, obviously that would be great for bulls. Okay, if you measure this, lots of different ways to measure it. You can measure it from wicks to tails. You can measure it from the top to this shoulder here. You can measure it from the top to the shoulder here. Me personally, I talked about this yesterday. I like to be a little more conservative, and so I like to measure from the line chart, and I like to measure from the close here to the smallest move. So in this case, it'd be about $1,872. And if we drag that down, that gives us a target down around $6,600, which, remember, I talked about this in yesterday's video, we down here around the bottom of this low back in December. Okay, and then maybe we get a tail that slides down or something. But that's kind of why I'm a little bit skeptical, and it's why I don't want to go too hot and heavy on any long positions, right? If it goes up, that's great, right? I'll be happy. I'm not going to be sad that I didn't put all of my money in or anything like that. I'm not trying to cash a lottery ticket. I'm not trying to expose myself to crazy amounts of risk. I do hope it goes up, but if not, that's fine too. This is kind of what the charts are saying it, but we'll see. Okay, if we look at the 50 and 200 moving average, of course we did have. I'm going to move all this these drawings. I'm going to move them off for a second. We did have the golden cross, of course, but unfortunately, as soon as this cross happened, price just dumped. It hasn't done anything since then. Came back down below the 200, came back up, tested the 50 moving average on a bearish retest, and then collapsed. So now we've got a 200-day moving average that's turned down. We've got a 50 moving average that's turned down. And if these things recross, which could be a while. But if these things do end up recrossing, a 50 moving average crossing a downward sloping 200 moving average is the worst type of death cross. Okay. So we really don't want to see that. Even if you are bearish and you're trying to short this thing, we really don't want to, we want to be careful what we wish for. We really don't want this thing suddenly collapsing to $1,000 or something crazy, right? So, there's a lot of stuff going on right now. And if you're really, really stressed out about it, sometimes the best bet is just to wait and let the market unfold, right? Put in some structure and tell you what's happening. A lot of people have asked me, James, what would make you bullish as far as, would you feel more comfortable putting more money in and things like that? And guys, it almost always comes down to the same thing. I really want to see structure. So we've come down, we've tagged some really important price targets. We've come down, we've got right inside that golden zone. All that's really good. But this head and shoulders is a bearish structure. We don't want bearish structure, right? What we want, these lines are driving me crazy. What we want is bullish structure. So, like a double bottom inside that golden pocket, that'd be awesome. Or a double bottom right on top of the trend line, that would be awesome. If we put in some type of inverse head and shoulders down here, right? Something like this, that would be freaking awesome. I'd want to go long. I want it broke that neckline right there. If we put in some kind of, head and shoulders, inverse head and shoulders down here, or a double bottom on our side, that'd be fine too. If we come down and find support on this yellow line, that'd be great. Especially if we did something like this, right, on that yellow line. Awesome. That's the type of stuff that I'm looking for. So like, for example, when I say support, the first thing is, okay, here's a line. What happens when it hits that line? But it's not just about hitting the line. It's about, is it going to put in some type of bullish structure on top of that line? And that's the type of stuff that I'm looking for when I'm talking about going long on like a multi-week or even a multi-month type of position. It's not as important for scalps. For scalps, it's not a requirement. I can scalp a line and try to catch a wick. So for example, like if this wick had hit this line, that might have been something I looked to scalp and play a bounce. Or this wick right here, I didn't play it, but this is the type of tail that oftentimes I'd try to get in on and then sell the bounce, type of stuff. So anyway, that's what's going on with Bitcoin. I'm not going to go into alts a lot today because I want to try to keep that stuff to the once a week videos, and then of course I do more frequent updates in the Patreon on that kind of stuff. But I did want to do this Bitcoin video. I really appreciate all of you guys that subscribe to this channel, whether you join the Patreon or not. I really do appreciate you. So hopefully this helps to put your mind at ease, kind of let you inside my mind for what it's worth. I'm just some guy. But this is kind of what I'm thinking on the market right now. And I'm just patiently waiting, right? The bad news for Bitcoin really has been that we had oil crash like 30 some odd percent, which was actually great for me. I made over 8% on a trade this morning on oil, but oil crashed. We have the S&P 500s crashing, a lot of stocks are crashing, and this was the exact environment that a lot of the talking heads in crypto said would cause Bitcoin to rally. This is the type of environment where they said people would fly to Bitcoin as a safe haven and it would pump up. But that's not what happened. Gold pumped up like it was supposed to, and the Japanese yen pumped up like it was supposed to because those are safe haven assets. But cryptocurrency collapsed along with the other global markets, which means that it's actually acting as a correlated asset, which is exactly the opposite of what you want with a store of value. So that concerned me a great deal because, if we do get a recession, if the stock market does crash, Bitcoin very well may go with it. It may not be a case of, hey, look, the stock market crashes, a recession comes, and that's what sends Bitcoin to 100 grand. And maybe that's what sends Bitcoin to 1 grand. Okay, so definitely keeping an eye on that stuff. And by the way, if you're not watching the stock market, just a quick update for you on that. I did a video or a post, I don't remember now, it was a couple days ago, but I said, I know I did a post on Twitter, and I'm pretty sure I did one on Facebook as well. But basically, at the time, this was turning back up and pinging into this line. And I said, look, if you're a Bitcoin bull, you want to be watching this thing, and you're going to want this to break back above this line, because if not, we're going to get more downside of Bitcoin, or we will likely get more downside of Bitcoin. And unfortunately, it didn't break through that line. It just collapsed. And when it did, Bitcoin moved down even further. It's moving with the S&P 500. Okay, so this looks really, really bad. This is a monthly chart on the S&P 500. Of course, this was massive bearish divergence, and the fact that this did not hold up as support and that it did hold up as resistance when I tried to retest it, it's not great. Okay, the other thing on the S&P 500, and again, it doesn't matter whether you're trading stocks or not, you need to know this because Bitcoin's acting as a correlated asset. We really wanted to see this thing, find support here and bounce off of this, or at the very least, maybe over here find support and bounce off of it. But it chopped through that level, which is bad, bad, bad. Okay, and I'm not saying bad like the world's going to end. For people like me, for a trader, this is actually not a big deal. In fact, it could present an amazing opportunity if we do get a recession and this does crash and Bitcoin does crash. I have a lot of dry powder, so to speak, meaning that I've got a lot of my trade funds sitting in fiat right now. So it would allow somebody like me to go in there and capitalize on a down market. But, I'm not going to sit here and celebrate because most of my family, for example, and most of my friends are not traders. They have their retirement tied up in this type of stuff. They have their savings in it. They have, all kinds of money invested in this stuff. And I'm not going to sit here and celebrate the average person losing 20, 30, 40, 50% of their net worth. That sucks. I hate the fact that that has to happen for me to make money. But, well, it doesn't have to happen, but I hate the fact that it's going to happen eventually. But, it will happen. It's just a matter of when. But, if this thing can come down to this level here, and by the way, this is actually an ETF. The regular S&P 500 is actually like, 10 times this. So it's not 276, it's like 2760, etc. But, if it can come down to this area, for example, and I'm not saying it will, but that's the type of area where a lot of people, the general public, they're freaking out, right? They're like, oh my God, have you seen this? The S&P 500 is down 35%. But it's the type of area like people like me, we're going, okay, put in some structure, please. Give me a W so I can buy this sucker before it goes back up, right? So, but anyway, that's kind of where I'm at, guys, with all this stuff. All right, I'm going to wrap up by saying a couple different things. Number one, if you haven't joined the Patreon, remember, there's a link in the description. You can join for literally $4.95 a month, practically nothing. And I do share more frequent updates as well as charts, posts, and all that kind of stuff in there. So would love to have you in there. We're moving steadily toward the goal. The goal right now is to get at least 200 members in there. And when we do, then I'll commit to doing at least 3 videos a week for the Patreon group. And when we can get to, 250, I don't remember the number now. I think it's 500 members. So we get 200 members, I'm going to commit to 3 videos a week. And if we get to 500 members in there, then I'll commit to 5 videos a week. So, and who knows? Maybe if we can get to like 1,000 members in there, we can introduce some type of chat feature or something as well. That wouldn't be hard to do. So make sure you check out the Patreon. And other than that, please remember that, while I am a full-time trader, I am still some guy sitting in a spare bedroom. So nothing in this video is trade advice. Nothing in the video is financial advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in anything, whether it's cryptocurrency, whether it's stocks, whether it's Forex. Always check with a professional, all right? And also, always play with money that you can afford to lose. That's extremely important. There's always systemic risk with this stuff. So, for example, Robinhood went down a couple of times over the last few weeks. I may have to pull my recommendation for them because of that, right? They've been down entire days. They were down for an entire day. I think it was last week where you couldn't buy or sell. So if you were stuck in a position, you could have lost, enormous amounts of money with nothing to do about it. So stuff like that's the reason you always want to be careful about how much you're investing and make sure that you're never putting yourself in a position where if things do go sideways that you're going to be out on the street. All right. This is James with Crypto Common Sense. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe if you haven't already. And as always, please remember to trade safe.